All right. So happy New Year's, Wall Street Jet boys and girls. We're here with a game plan Sunday, our first one for the year. And I'm excited to be here with you guys, and we can take a look at the markets and see what's going on. Over the past, I believe the past week, we actually dropped the blog. I'll show you guys here. The Year of Volatility 2018. If you haven't had a chance to read that, make sure you guys check that out. Very insightful, but it's just pretty much a good wrap up of the year, and all the players and what happened. Okay, so you're like, man, what happened? If you traded with us last year, 2017, and it was a year before, it was beautiful year, man. I think that we took that for granted, man. If y'all was with me, if you listen, when you're looking at what's happening right now, and you see what happened 2017, like, man, can we bring that back? Yeah. So let me just show you guys. This is a chart of the S&P 500, and we'll go to the SPX on this one here, and we'll go back to a 3-year chart just so you guys can see. But basically, if you started your trading career from here to here, you see how like easy that was? Like that was like dirt easy, right? I'm telling you, man, you should look at some of your portfolios and see what the experts are trading. They're probably trading trash, but because the whole basket has been going up, I mean, shoot, you just buy anything and, the trust is going to carry you where you need to be. And that's basically what was occurring. And we didn't really get our challenges until, right after January. And you see we got those dips in there. Those dips is like, whoa, break your neck here. You see what I'm saying? So, that's basically what was happening in the beginning of the year. We had a tough time making it through spring, and it was, whippy right there. And then after it shook out everybody here, rally continued again all the way up until about September. I want to say October, up until October, and then we peaked out. And from there, as I mentioned in the write-up, the markets is, going straight to hell, it's like B. Okay. And that's why I call it, the year of volatility, So when y'all saw that article and it says year of volatility, well, there was no volatility. You see the difference? So you have a lot of people that show up and are like, oh, I'm a millionaire, I'm rich, this, that, and the third. But really the effort, what was the challenges? There wasn't no challenges in that, you know what I mean? And then you see those same people like, oh, I'm broke. You know what I'm saying? Oh, I blew a whole account. But you got some hedge fund managers that's actually been blowing accounts. It's been crazy because this unseen level of volatility is crazy. So, and this is the way we're beginning the year out. We're beginning the year in this treacherous arena. I call it the treacherous times right now. So there's going to be a lot of I think it's going to be a lot of chaos this year. And I was talking to the wife, and I was just telling her, I was like, it's interesting that when we come to the stock market, and it's like it's chaos, but it's order in the chaos. When I was doing my data science courses and everything, it's like you have a whole bunch of numbers that's just random, and like one of the goals is to find order in the chaos, find correlations and things like that throughout the numbers to try to make things make sense, basically. And that's basically what we do, So in the prior years, it hasn't been as chaotic as we're seeing what we're getting to right now, which you guys can see these charts right now. And so this first week, it's just, hey, relax. Let's see, we're just, seeing and trying to identify what's occurring, We're trying to identify behaviors, new patterns. There's a lot of new developments that's occurring in 2019. We'll go over some of those here. I think that we all should be aware of those because it can help guide our decisions as far as, what we should do, what we should be trading, where we should be allocating dollars. That's just what we're basically going to do here. And so anyway, looking at the S&P 500, it's crazy here. This past week we had big move from Apple. So let's just go ahead and just talk about Apple, the gorilla in the room, the elephant in the room, I should say. we'll go back here to the charts here and just take a look at Apple here. Apple basically just drug everything through the mud. You know, if you guys can see this big, you know, drop on one day on Apple, you know, that was crazy. And basically Apple, they just basically reduced their guidance, their forecast. You know, they got, you know, their forecast, they just basically reduced it because of the slowing down of the economy. So back in the blog, we talk about, and y'all know we've been talking about this for the past quarter about, you know, the economy and everything slowing down. So I might do a write-up 2019, the year that the world slows, right? The year that the world slows down, because basically every, you know, financial analyst or, you know, economist, they're all projecting that the global economy is going to slow down, basically. And so with that being the factor, it's like, okay, well, how are we going to make money and it's slowing down? So growth stocks, you know, growth, if it's slowing down, then growth stocks normally get hit there. And so the evaluations and things that they have, you know, they have to cut those things, you know, constantly. It's, you know, Wall Street has the expectation or the guidance for whatever companies to go to the next level. You know, again, we're dealing with capitalism, and it's all about getting bigger, better, faster. Bigger, better, faster. And how can we do that? You know, how can we get bigger, better, and faster, grow? And so we had to assess the environment, what's going on. One of the big things that's happening right now is a shakeup in tech. Okay. If you remember, I just showed you guys a chart. That whole run up, that was basically the tech stocks, man. All you had to do is FANG stocks, Facebook, Apple, Netflix, Google, Amazon, NVIDIA, all those stocks. I mean, you just bought those, then you know, you made crazy bang for your buck. And, you know, that was 2017 time frame, 2016, 2017. And there's a lot of development with data. So a lot of companies are now getting access to data. Data is the new oil. So I don't know if you guys know or heard me talk about these things. I talk about it if you guys follow me on my Facebook page. I'm always talking about these things. You know, I got a couple of certifications and things. I got some knowledge on the matter and done some programming, and it's crazy. When I tell you it's crazy. So basically, data is the new oil, and whatever companies is lagging with their data, you know, building up in their departments for data science, computer science, and stuff like that, they're just going to get wiped away. You know, that's just basically the environment that we're in now, because the artificial intelligence, it allows companies and corporations to be able to do the same tasks that we do as humans, but better, faster, more accurate, more safe. You know, it's more safety and it's cheaper, you know. And corporations, they all have a goal or a job to bring back money and profits to their shareholders. So if you know, have stocks in the company, you have ownership in the company, and their goal is to bring you back some money. All profits belong to shareholders. And you'll see that if you look at any corporations. I actually use a site, and I think I was talking to, who was it? Ashley, and she was asking about, you know, how I do certain analysis. Let me see. I'm gonna put you guys on the website. You guys can check this out. And this is, you know, if you're looking at your portfolios and everything, or stocks that you're looking at investing, there's a site here that's called Seeking Alpha. Definitely check it out. You know, this is a really good site. And basically any company, you know, that you want to see, you can go here. You know, I don't know, maybe you work at McDonald's, so you can just type in the stock ticker there, just throw it in there. And when you throw it in there, basically, you can come to, I believe, earnings. Yeah, here we go. You can come into earnings. You can check out the earnings they have, and transcripts. You can, you know, hear what the CEOs, the you know, leadership, these guys, CEOs, CFOs, they got to report to Wall Street, basically. And you can actually listen to the calls. You can actually call in and listen to the calls live and everything, get all the information before, you know, employees get it, you know, managers and, you know, lower level employees. But this is a great place. You can come here and you get a lot of valuable information. So when you look at these transcripts, you can see what they're talking about. And again, their goal is to bring back profits for their shareholders. You know, companies give out stocks, you know, again, so they can raise money. and you invest in them. That helps them raise money. Any profit they make, it's supposed to go to you. They either pay it out in dividends or they do share buybacks and things like that. So anyway, the name of the game is to grow revenue. And so with companies, corporations, how do they grow revenue? You know, you grow revenue by increasing sales, by having more sales, or cutting expenses. You know, how can you cut expenses? You have some companies that's top in growth. They really can't grow no further in their space. We're kind of seeing that happening with Apple right now. We're basically, you know, they just at a level where they're peaking. So yeah, you know, everything in life is cyclical. Okay, cyclical. You know, has these ceilings and floors. Nothing is just always this. You know, and that's one of the beautiful things that I learned from the stock market. When I see everything in life, I see the correlation. I'm like, you know, the stock market is like real life. You know, it's nothing that just really just goes straight up. You know, you have ups and downs in life. You know, you have jobs, you get fired or laid off, or you have a relationship, you get married, you in love, have babies, then you get divorced, blah, blah, blah. You know, everything is just up and down. So same thing with these companies, stock market and everything else. So, yeah, it's like a living organism so fast, definitely. But anyway, just keep in mind when certain market environments, you have to understand the environment that it's in. When it's shifting, it's going through different phases. And when it goes through different phases, the companies try to maximize and leverage those things. And then from that point, once they reach a ceiling, a peak, then, you know, they have to understand, or they have to start developing and putting money into innovation and to developing new technology so they can get to the next levels. And so with Apple, basically, we saw, you know, the company, Tim Cook, he talked about some issues out in China. You know, we got the tariff wars and everything, and that's dampening, you know, their profits. But more of anything is basically iPhone sales they're going down. You know, they've peaked, and smartphones across the board have peaked. So as far as technology, smartphones are shipping less. They're shipping less smartphones across the world. Really doesn't really matter which company it is. They all are kind of like, you know, peaking. And so in the tech space, there's a need for innovation. There's a need of reinvention. And I'm also a developer at Samsung. So I had got an inside scoop on the new smartphones that they're coming out with this year. And, you know, they're trying to get us to develop apps and stuff like that ahead of time. They got new things. So we know ahead of time. But 2019, what they're doing, and other companies like Google also, they are doing, and this is, you know, I'm not an insider, you know, I guess, I don't think I'm an insider, but anyway, because we're not trading Samsung, but either way, basically the new phones that's coming out starting this year are going to be two-sided phones where you're basically, like a phone here, you have a screen on the back side and the front side. Okay. And I think that's one of Google's designs. And then with Samsung, they having a foldable phone, like folding. But anyway, we're seeing tech companies that, you know, because of the peak, the need for re-innovation, new innovation, reinventing, you know, the wheel, reinventing, you know, what we know about smartphones and stuff. So that's something that we're seeing. And then the market it gets volatile because they don't know what the market's going to take, you know. So they got to put it out and see how consumers take, see how that works out. So that's going to be interesting development. We also have 5G. Yeah, that's the way to think, Wes. Yeah, that's the way to think. You got to get ahead of what's coming. So that's why it's important that we know what's coming so we can get ahead of it. Another thing that Verizon launched 5G, which I think Verizon, I think they're going to do great this year because the 5G is the new thing. 5G is like better than Wi-Fi basically. And so this year what we're seeing is corporations are basically going to be ditching Wi-Fi and they're going to go to 5G. Okay. 5G is and who's in here? Mark probably knows. I know that you're in the tech space and Mia, but basically the difference between Wi-Fi and 5G, whatever amount of seconds it is, you know, it's valuable time that corporations definitely value, and because also what the corporations are trying to do is they're moving in artificial intelligence and robotics into everything because it's just better. Okay. It's going to cut jobs, point blank period. Jobs are going to be cut, but corporations, they will be able to grow revenue faster. And whoever doesn't get ahead of it, they're just going to go out of business. Basically, they're not going to be able to compete. So everybody's getting ahead of that. But the timing of Wi-Fi, 5G, what it would be able to offer them as far as lines of robots and everything like that, as far as communication, is so much better. So there's a race for 5G implementation. So anyway, who's leading that? Verizon. So that's something that I would look into. If I were you guys. What else do we know that's coming? You saw a robot in Walmart. Oh, gee. Yeah, but Amazon got their, cashierless stores. They rolled out a couple of them last year. You're going to see more of those coming. And, for consumers, it's a better experience. You could just walk into a store, grab your things, and just walk out. Just scan. Smartphones is like the beginning of everything. Smartphones has created this environment that we're in now. And when they started, I don't think they knew it was going to come out like this, but it is. And smartphones, as Elon the Don says, it makes us cyborgs. You give your deepest and darkest secrets to this thing right here, taking your little pictures and everything, and it's all stored away in somebody's cloud. And the cloud is, basically you got Amazon that runs the cloud technology. You got Microsoft. You got a lot of players that's into the cloud technology. And but anyway, you got social media now, and it's kind of a cyborgy kind of world that we're in. And it's just the beginning phase. And so a lot of stuff we're going to see is going to be more of easing it into society so it doesn't create scare. Also, driverless cars, driverless cars. I posted some things. You guys follow me on Facebook. You see some of the things we posted. And these things have to happen. They have to come because of capitalism. Capitalism is all about growth. And when it comes down to picking society versus capital, hey, they go into capital because that's how they survive and thrive, I guess. But automation everywhere we're going to see more of that this year. And so along with all the automation and artificial intelligence, deep learning, robotics, humanoids, and things like that, I think other good things would be like cybersecurity. Cybersecurity is going to be big. So cybersecurity should definitely be on a list of good stocks that, you want to choose. Powell, he spoke on, was it Friday? We had the jobs numbers, the jobs reports. If you guys can remember, the job reports came back, I believe, over 70% of Wall Street expectation, which is like a major deal. I think we had created over 300,000 jobs for December. So we had a rally. After the sharp drop, we had a nice rally after that, super moves on Friday. And then we had Jay Powell, who talked about, he basically talked about them being able to quickly adjust to changes in the market environment with interest rates. And that's been one of the big things with investors because, and I'll talk about some other things here, but with the investment worlds, the rate of speed and the amount of interest rates that, they're going up, Wall Street just hasn't been having it and not feeling it, not at all, because the cost of doing business is impacting it negatively. And so a lot of times we don't see these things until a couple of months in the future. And so when they're talking about it, it's a lag effect, basically. It's really like this lag effect. And I think that the consensus on Wall Street is that, hey, man, the Fed, by the time they figure out that they are, overcooking it, basically, it'll be too late. And then if it's too late, then, we'll go into a full, recession mode. And, the goal is to try to avoid recession. But, it's a tug of war. You got Wall Street versus the Feds, and we'll see who wins, Either way, options, we have lots of tools for whatever environment comes our way. So that's a good thing, about options, So definitely shout out to everybody who's taking the time to learn. But it's something to definitely consider. So Friday, that was the pop that we saw. It came from Jay Powell speaking. And it's crazy because did you guys catch the I posted on our let me see if I can pull it up here. I know I have posted on, let's see if it's in here, on the Instagram page. You guys take a look at the, maybe it's not there. Okay, I know where to find it. But anyway, it was, I believe it was last week, and it was real interesting because was talking about the Treasury. Steve Mnuchin had to call people up. Let me show you all that real quick. There we go. As we can pull that up. Y'all catch that Instagram post? So when the market was going slam to hell, I caught this funny guy in the background. It's like, who's Steve calling up, right? He's calling up all the big players in the game. Like, yeah, we got to make some moves. We got to do something. But the way that they're moving is very similar to, 2008, the house prices. If you guys, I don't know if you was there, but if not, watch. There's a good movie called The Big Short, so I definitely recommend that. I recommend watching that movie, man. You can have it's a real good movie actually, so you can have the family watch it. It's not like a super nerd movie. It's a real good movie to give you some insight on what happened in the 2008 housing crisis, and how they were moving. And some other movies, I can't remember the names off the top of them because y'all know I don't really watch much TV, but I have seen a couple of movies that were really good that goes into how the Treasury and the Feds are behaving during this time. And it's funny because we're seeing the same kind of behavior, like you calling people up. Okay. And then so Friday we had Powell, who was in a meeting with Yellen and Bernanke, the previous Feds. Like, why he meeting with them? What's going on, right? So anyway, when you see like headlines with these, people that's controlling the environment, or they have, major power moves for the environment, you need to pay attention because they may give you insight on what's to come, what's happening, So if things ain't looking right, then you definitely want to take a look into it. But that's basically everything that we had that pretty much came from the first week. We did have, as far as the geopolitical stuff, we had the Democrats that took control of the House. And that's something to definitely keep in mind because it's going to make the environment very, very volatile as well. And so I can only see more volatility coming this year. I think it's going to be just a real rocky year. And so you're going to have to get in and get out real quick because any given day it can be some crazy stuff happening. So, with the Democrats coming in, they're definitely going to do everything they can to thwart any progress or any things that Trump has going on. Last year, one of the things that benefited the markets was the tax cuts, or you look at the corporate tax cuts. So a lot of, what we saw with the markets with that nice run up is, the benefit for the tax cuts, companies, all the excess cash, all the excess money, just the nice run up, and lots of share buybacks. We had lots of share buybacks in the companies, again, everything to benefit shareholders. That's what we saw. And there is, basically sentiment about the tax cuts running out. And so now we're getting that. So now it's like, what's the next move? We got the tariff wars with China. And that's dampened, a couple of companies that had exposure, heavy exposure in China. Apple is one of those companies. But tomorrow there is a meeting tomorrow. So definitely we're watching the markets and see how the markets behave tomorrow and Tuesday. So Monday and Tuesday, from the last time we talked, President Xi and Trump, they had a 90-day truce on the whole tariff things with, him increasing the tariffs. And if they do that, then that's not going to be good. But everybody, is expecting something to materialize from the Trump, China and U.S. deal. And that starts tomorrow. And so the market is going to be paying attention to that. Any, thing developing from that, good or bad, I believe we're going to see the markets to react towards that. What else we got coming up? I think that's about it. We got the Treasury speaking, I think on Friday. They're going to be talking about the federal deficit, and I don't have any charts put up for that one, but deficit is it's a major issue, and it's projected to go up to I believe like $1 trillion or so this year. So that's just not good. And some other stuff, man, that people probably not talking about. But one of the major issues that I think should be talked about is corporate debt. It's a lot of negative sentiment about, corporate debt. And it's, we have some pretty nice financial analysts that's, looking into the numbers, and they're saying that it's a big bubble, a big, fat, ugly bubble worse than 2008 housing market crash. So, basically a lot of these companies are over leveraged and they're not going to be able to pay out this debt when the Feds, drop the interest rates during, from the after the crisis. Companies are just ringing up the check, and now that the Feds is going up, over 2.5, 2.50, I believe, but the interest rates is high. It's real high, and so. These are developments that we're going to be having to keep our eyes on because it's going to impact the markets on, how, corporations are, how this stuff is going to fold out, how it's going to unfold. Will we enter into a recession this year? I don't know. That is a possibility. So I definitely wouldn't take it off the table. I believe the risk for recession is greater than there's been in since the last recession. So that's definitely a possibility. Do I think they're going to allow that to happen? Hopefully they don't allow it to happen. I think that they're, trying to, implement things to prevent that from happening. But again, sometimes the tools that they use, like quantitative easing, quantitative tightening and interest and things like that, they're lagged. We don't see them till, months down the road. And by that time it could be too late. And so, for that reason, I think that my outlook is just I think it's going to be a choppy year. I just think it's going to be a choppy year. I'm not too sure if it's going to be a bullish or bearish year. I don't have any projections on that. I just think it's going to be more volatility than we've ever seen. I think it's going to be a treacherous year. So definitely, just in case you guys want to know, that's just from what I see in the market. I'm not, a guru or anything like that, but you'll see the things that I'm talking about. You guys are going to be hearing more about these things from all the top dogs. And so you'll see how these things impact. As far as trades for the week, I don't have any strong convictions on anything to trade this week, to be honest with you. We're still in the beginning of this treacherous market we're going into. I don't have full direction on anything just yet. Basically, the markets is, in a downtrend, but it's actually starting to bounce up within that. So it's a counter trend. So right now, most of the things that we're seeing is counter trend setups. And those things, those are, these are more, dangerous. Just taking a look at the S&P 500 here, you guys can see that we're clearly in a downtrend, right? Okay, doesn't take a rocket scientist to figure that out. And what we're seeing within this is the bounces. Come here, it's bouncing within, within the range. And it's like, where are the ceilings? Where are the roofs? Where are the ceilings at? You guys got the moving average, the elite moving average. It's actually working pretty good. As you see, it's pretty dead on. You see the little blue lines here. We caught that, you can see the run up right into there. And then we have a Fibonacci to highlight that this is a ceiling here. And so the thing about ceilings is that sometimes they hold and sometimes they can be broken. We don't know what's going to happen to this ceiling, but, it's right there, So as far as direction goes, it's a little too treacherous for me right now. But things that I do see, we had a nice pop into biotech this past week, which was the ETF IBB. And this was a super nice pop up in this sector here. And if you take a look at like all the other sectors, I mean, they're looking, not good, not at all. Okay. Josiah, I'll answer your questions here in a few moments, or if anybody else can help out in the group, because we're getting ready to bring it to a close in a few, but I'll help you out there. So if you just stay put, we'll take care of you. So basically, biotech had a nice pop off right here, and it looks good for a nice sector. And within that sector, we had Celgene. That was a crazy move right there. That was a crazy move. This move was just crazy. I posted in the group like, yo, why y'all didn't put me on this, right? Like, that's, super crazy, parabolic, straight up. but it looked like it's actually look like it's forming a flag though, or pennant. You know, I don't know. Sometimes when they normally do like this, they normally you know, form some kind of flag or pennant. You know, we may see because this resistance level here. You see the moving average is showing us the resistance level, and we got the Fibonacci on top of it. So we know that's a key level of resistance. And so because it's already at that extension level, I doubt if it continues to go further. Right now, I think it's probably going to start consolidating a little more before it makes its next move. But as far as the sectors go, you know, this is a really great sector for this past week, you know, in the middle of everything. Netflix looking good, and I actually like Netflix for a bullish trade. And Netflix actually, you know, most of the charts look like they're in counter trend mode. You see, most of the charts that you guys see would be like that, but they're trying to, you know, they're coming up, but then they get smacked down, get rejected. We got, you know, Netflix. It look like it's trying to pop up a little bit here. You know, it's actually popping through that little channel there. And Netflix, we talking about technology earlier. We talked about the innovation of technology. What's new? I know that Disney is working on something new to try to compete with Netflix. It's interesting. But I watched a show called, somebody can help me. I don't know if Tay is in here. I don't really, because again, I'm not a TV buff like you guys, but it was the Bandersnatch. Who was that? Wes, you talking about the Bandersnatch? What was the name of that movie on Netflix? Is it, I know you guys just said it, Black Mirror. Okay. So yeah. All right, good. So again, I want to talk about Black Mirror was a really good TV show, but it's a different kind of TV show. The TV show for Black Mirror is different because it's an interactive TV show. The users get to predict the outcome of the situation throughout the movie. It's like you get to choose what you want the characters to do. Like, it's pretty awesome. You know, I thought that was very innovative. You fell asleep on that, Topaz? No, you can't fall asleep on new technology like that because we haven't seen anything like that before. Nobody else has that. And so with Netflix, you know, leading the way with them, kept chopping up the right. But it's cool because, you know, again, we're talking about the need for, you know, new technology, right? As things cap out, it's either going to get pushed down or you need some breakthrough to pop through the ceiling of it. And so Netflix is actually already ahead of everybody on that. So I believe that Netflix is, when it comes to the tech sector, definitely I'm bullish on Netflix, and they're already proving that they got what it takes to continue to lead. And just that one TV show alone, that was enough proof right there. So if you guys haven't watched that, I mean, hey, take your time, watch it. I don't know if you'll be into it or not, but it's cool technology. And I think we're going to see everybody else follow that trend. Wes, you read an article today about an alternate ending with QR codes and the games from the show and stuff. It's groundbreaking. Yeah, it's crazy, groundbreaking technology. And so, you know, got a nice little move right here on Netflix. Anything bullish in the tech sector, I definitely would put my money on Netflix above all. And then we also had Twilio. This was a play, let me see, I think I was, I posted in the group here. This is something to watch out for too. This is a video game stock, and they are major. And so, you know, we have some nice clean levels here, pretty much. And what we're looking at, we do have some overhead resistance. We want to see how this behaves. You know, it kind of got rejected once it popped through. You know, it popped through a little bit and it came back down, but it tested this floor and now it's popping back up and it's testing against, you know, the 618. And so I would like to see, you know, how it behaves, you know, with the 618 here. If we start to see it, you know, pop above, then I'm going in for the long side. So, but again, this was looking pretty good through the tech sector when I noticed it. And this is the intraday chart. Okay. And that was the, again, that was the intraday chart. I know financials. I like financials. They're doing a little better. Financials is a tricky one because with the interest rates going up, most people would have thought that they would have been going up. And you see they got smacked down just like everybody else, which is kind of weird. But again, it's all, boiling back to this corporate debt stuff. Okay. All this stuff goes to get, it's so big, I can't really put it out to you, but it's a lot of moving parts in the market and everything is so like, anyway, it's a lot of different things is moving. But I think that big money investors do have, you see, this is a good looking one for financials. Yeah, it's a good looking one for financials. Pretty decent. Again, our ideal setup is for our stocks to be trading above our moving averages. And as you see, these things are under. So pretty much every chart is under our moving averages. And this is what makes us treacherous. So remember, we ideally like to see the stocks trade above, okay, for the bullish, for the bullish plays. And then we can catch fades in here to the downside if you're looking to the shorter side, when they push up against those ceilings. And, anyway, we're going to just, see how they work. Are they going to push up through, push up? We know they're going to push up to the resistance levels, but will they pop through them or they start to stall and then we start to see it go down? So once we see some more better prints in the market, we'll be able to have more confident trades out there, I'll be able to better vision, more clarity on, what's coming in the market. And I think that's pretty much it. I don't really have anything else on my radar. I'll take something for you guys. You guys got any stocks, trades that y'all looking at? We'll take a look at those real quick. And okay, there we go. LNG, is that energy? So yeah, this one right here looks good for energy. The only thing on LNG is the liquidity. And so, let me see. But looking at 40 days out, it's just not much going on 40 days. But for the 12 days, which is the most immediate, yeah, you got more. Let me just change this. You got more open interest, in on these here. You see what I'm saying? You got more open interest. So if you're looking on the 40 days, it's real skimpy out here. So that would be a concern of mine if you're going to do it, but I believe that it's low volatility. Let's see. Yeah, so the volatility is pretty low. It's about halfway. So this is a good one. It's about $560 for a call contract 40 days out. But if you go in $300 here for the 71 deltas. If you're looking, for a buy position, more short term, about $300 for a call there, and that's pretty fairly priced. We got a 3-point move in there, almost 4-point move expected move for the stock to move, and so 61.75. That's about $65. And if you see that move, according to that, it goes straight up here to our Fibonacci target, the 618, right there to the upside. Okay, so yeah, it's got a nice squeeze here. We got some up momentum, but there is this immediate overhead resistance levels to keep your eye on. And if you get a breach above that, then good. I would, definitely consider taking that to the long side. This is on the intraday. So if you're looking on the intraday, you see how it's starting to behave to it, but it may push through it. So if we get a push above that, then definitely I like that to the long side. What else? Deer. Okay, let me back out here. John Deere, let me just look at the bigger swing here. All right. Oh, I think I actually missed that. Let me get that right. So we'll just look into the swing within the swing, basically. And then let's see, about 165 target on the upside there. That's in the squeeze. Let me see what the options chain like. This is the options chain. How we looking? Again, we got some movement in the 12. What about the 40? Okay, 40 days out, looks pretty good. And then you see, got more calls and puts, so the sentiment here is bullish. And yeah, so I mean, I think I like this to the bull side. We got 8.5 movement priced in. What do you say about 150? About 160. So really, this target here would be more appropriate for this one to the upside. So that's a more appropriate target for that to the upside, according to our expected, range. But again, got some overhead resistance. So make sure you guys, when you're looking at them, look at them on the intraday charts. What else we got? 5. Okay, and this is here. Again, some of my charting here is old, but we'll just take the swing from here. Get some retracements here. And then we'll take a look at the longer term. All right. The thing about this one here is that, again, this is a consumer stock. This squeeze is just starting, so it's still fresh. Still fresh. Again, we want to see how it's going to behave throughout the week against these levels here. Anything to the upside, play it long. But I think we may consolidate a little more. It just depends on how much momentum get pushed out of here. It is in an uptrend, but that trend is kind of, could be capping off. I'm not too sure. The overall trend for this stock, though, is down. And so, again, we're seeing all these counter trend trades here. And these counter trend trades, they're more riskier. They're more riskier because they're counter trends. So when I say treacherous, that's my own terminology. I don't think that's a technical term, but I call them treacherous. So, yeah, you can make money, but it's a little more treacherous. Cron is the weed stock, and it was actually looking pretty decent. It looks pretty decent with the movement in biotechs. I believe that we may start to get some more boost in the weed, but weed stocks is real volatile right now. They're really not moving all that well. Now it's in the bullish trend for right now, but they're really volatile right now. And we see that the trend came down, but it's starting to pick back up now. If I was, be forced to take anything, I'd be looking to a little upside to it, but I wouldn't really expect too much. Let me just go on this. This is a little pennant here. We can come back and prove these, but yeah, for the immediate term, that's basically what we're looking at. It's a little. You guys got the little pennant play, and it's broke out of it a little bit. Well, it did break out of it, but it's getting rejected up here. This is a level to watch. This $12 mark. This is the 618 retracement. So basically, if you see how it behaves towards this, if it starts to break above it, then I'll be looking for it back up to about $15. But if not, it'll just get rejected and come back down. So. But weed stocks they're all over the place right now. They're not moving in consolidation into a good move right now. Twitter. Twitter. So it's been a while since I obviously charted Twitter. It's crazy, man. I did this a way back, and those channels are still there because I draw the lines. And if you guys can clearly see, it's moving in this channel. It broke out above there and it came back down within the channel. We're seeing it still trading within that channel. That's something to watch for the swings on this one here. We'll take a look. We'll go in on the intraday chart. And basically what I'm just doing is eyeing and seeing how the stock, how the Fibonacci is behaving. Twitter, this is an interesting one. We're looking how it's behaving up against this mark here. You definitely, I mean, just had a squeeze, fresh breakout right here. You know, the squeeze was in here. This would have been your day trade right there, Topaz. That would have been your day trade right in there. You guys see how it's going to behave towards this $30 mark, this $30 mark here. This is a level of resistance. And so, you know, in the morning, see how, you know how you run your pre-scans and everything. So just, you know, see how that's going to be moving up there. Now, something else that you can do, Topaz, I know you're trading, you know, you're doing the stocks and stuff. One of the advantages of trading the options, you can come in here a little ahead of time, and you can kind of see, basically where the market makers have it priced in at, the expected move. If we're looking for the expected range for the next 5 days, you know, and then the next 10 days. This is one of the advantages that, you know, you get in options that, you know, with the market makers, the guys who's making all the deals, this is the prices that they have here. This is saying, hey, this thing is going to move $2 up or $2 down. That gives you a nice range. And so you can just tack that on to your pricing up here and have an idea what to look at. And then, you know, of course, you can see ahead of time where people, you know, where the market is bidding at. Anytime the bid is higher than the last print, then that's a good move. Okay, so that means it should go to the upside, and normally it will have a nice pop. So it just depends. You can see this ahead of time. If you guys are checking your charts in the morning before you go to work or whatever you do, always come to your options chain. Look here at this right here, and you can get a head start on what happened. If you see this thing trading $2, you know, $4 or $5 more than the last print, that's going to be a nice big pop. So anyway, and we already see this at $30 right there, $30.02, which, you know, that's about right here. So it's the same levels. It's not too far ahead. Sometimes you see it print, if it's at like 30, something like that, and you're like, oh, okay, that's right there at that level. If it goes above there, then yeah, we're going to the upside. Okay. Oh, they show pre-market. Okay, that's good. I don't use it for that. I use it for the fundamental side, but that's good. Okay. All right. So I think we have a nice look here. What I'm practicing this week, again, is going to be more patience. Remember, patience is a position. This market is going to be treacherous right now, as we've been discussing. So you're seeing a lot of, when I say treacherous, meaning that it's hard for us to find direction. Let me just go back one more time. And, again, you only can predict and project with more stable markets, and volatile markets is a little harder, actually a whole lot harder to be able to predict and project. Last quarter, man, we've knocked it out the ballpark, upside and the downside. We caught all of these movements here, but it's getting more difficult. As you guys see, we caught basically all of that. We caught all of that just right, but now we're in a different zone. So trying to figure this thing out. If you're going to trade, our style is swing trading style. So again, we're in trades maybe 2 to 5 days for one position. We're holding the position for maybe about 2 to 5 days. We do have some day traders in here. Some of you guys may not be able to day trade. It depends on your lifestyle. If you got time to watch the markets in the morning time, markets open at 9:30. From 9:30 to I would say 12 o'clock. If you can watch the markets, then day trading would definitely probably be good for you. If you don't have that, to be able to do that, then day trading wouldn't be for you. I teach the swing trading style with options, which works better for people who work. I know we had it was the Josiah earlier asking. When we put in our positions, we're looking for them to make us some money within a couple of days, so you don't have to hover over the computer in a couple of minutes. So we can just get into our positions and we can hold on to it for about 2 to 5 days. Sometimes we can make out of the day. It just depends. But swing trading would definitely be the style. Definitely encourage you to go to wallstreetjackboys.com. I believe Mark posted it, the link there, or I offer the courses there. So you can get our training, our setups, supplemental information, trading plan. I got the new trading plan for you guys. I forgot, Lord, I had it last quarter for you guys. We'll be sending it out to you guys this week. I got an updated trading plan, and you guys can take on that and start setting your goals. Make sure you guys set goals for this year if you already haven't set any goals. Some of the major changes in this year again will be some of the things that I learned from last year when we got hit with the volatility earlier. When we got hit with this here, that took me by shock. It was like all of that was like, whoa, where did that come from? So I had to from this time frame, excuse me, not this time frame. This is the end of the year. Let me go back. It was in the beginning. I knew something wasn't right, but yeah, when this happened, it was like, oh my God. And then it was like, oh my God, like that right there, that whipsaw. I was like, yo, I got to adjust my trading plan. So when you have trading plans, we try to stick to them according to the markets. Okay. So the markets lets us know how we should behave, basically. When things start to change in the environment, we have to switch things up. It's just like when you're outside and it's hot outside. When I was in New York and I came down for Thanksgiving and it was like snow all the way up to your head in New York, I'm, with my coats and everything on. I come down here, for Thanksgiving and people got shorts and flip flops on. So I take my coat off, put on my t-shirt and relax. You got to switch up, according to the environment. When it's hot, when it's cold, you put a coat on. When it's hot outside, take your clothes off and relax. So basically, when this happens, normally our goal is to, take 50% off, return on our capital. We put our money out, we're going to see a 50%, return on there and we get out. So we do, that's a one-on-one coaches with you guys. And a lot of you guys already know when, this happened, it was like, okay, 50%, I wasn't getting my 50% the way that I normally would, so, we lowered our targets to 30%. So this is one of the changes that, I would, recommend, until we get out of this treachery. Okay. Because, you can be up, 40% in one day. And then that same day, you'll be down 60%. This is what we're seeing with all of this treachery. If I dial in on the intraday charts, all these days in here, you can see that was happening. You put your money in and the markets are snatching it back out. So you got to be quick with it. And if you have lower targets, you can, take your wins much faster. And that's just the way you got to behave right now. It's all about taking that money quicker. Okay. Anybody else got any questions here? Okay. And Josiah, make sure you just drop your contact information in the chat. So we'll get up with you just to make sure you situate if you have any questions. Email, drop your email or so, and we'll get that in there. Who else? All right. Okay. So I hope you guys, found this valuable. And hey, we're back Sundays, 7:00 p.m. Eastern time. Come through, bring a friend, bring a friend or two, see how we do this in real life. Make sure you guys, support. Y'all know what we do is real, and y'all know what we do is dope. Feel me? It's dope. So we're doing something that other people can't do, and we do it on a professional level. So, all right. She said I sound like. Listen, Wes. Listen. Don't tell me I sound like Denzel. I don't want to hear that. I don't want to hear that. I hear that too much. Okay. I was in the store and a lady, she came. I was on the phone and she stopped my whole entire conversation. She was like, "Hey, excuse me, mister, excuse me." I was like, "Ma'am, I'm on the damn phone." She was like, "Excuse me, sir, have anybody ever told you that you sound like Denzel Washington?" I was like, yeah, I actually get that a lot, man. That's funny. Tell your wife I said thanks, man. I take that as a compliment, man. I wish I was Denzel. All right. Well, I'm gonna go ahead and cut it short. We'll send out the replays if you guys are in. You guys will get the replays, and we'll get it together. That's right. All right, you guys. Much love. Peace.